Hey everyone, Nvidia invested in a new artificial intelligence company, SERV Robotics, and now investors are asking, should we buy SERV Robotics stock too? In this video, I'll take a look at SERV Robotics, its financials, its prospects, its viability, and compare it against its valuation to answer if this AI company is a smart investment for you. So let's get right into it. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. All right, so SERV Robotics is a last mile delivery company right now. It uses these robots to deliver food, mostly in the Los Angeles area. And since I live in Los Angeles, I've seen these around. And just to give you an idea of what I think of them physically, seeing them around, they are slow, clunky, and they stop very frequently when there is somebody walking around them. And they're not as high-tech at the moment as you might believe them to be, or as much as the company wants you to believe them to be. Now, that being said, these provide a big benefit, and they are a huge convenience advantage for both the folks receiving the delivery and for restaurants that are employing this to deliver their products, right? One of the slides in the company's deck here says, why do we use 2,000-pound cars to deliver a 2-pound burrito? And that makes sense. There's a lot of resources employed just to get a burrito or a burger from the restaurant to an individual. And you can do that a lot more effectively with these robots that deliver the items to your home. Now, it's early days and the technology is not as robust as you would like it to be. Still, it provides an advantage even in its current state because of the significantly lower cost of delivery when using robotics versus using an individual with a vehicle to deliver your food. Now, according to SERV Robotics, this could be a $450 billion market by 2030, the untapped market for robotics and drone delivery. Now remember, delivering food is just the first step. If the technology is robust and the cost to deliver is as the company is forecasting, that could open a wider opportunity for delivery. You don't just have to deliver food. You can deliver other things like medicine, like grocery. You can do other things in addition to food. Now, the company says here that the expected average cost of last mile delivery by SERV robots with increased autonomy and adoption could be as little as $1. Could be as little as $1. Now, that's, with the caveat that it needs to have increased autonomy and increased adoption, meaning larger scale. More people need to be using this in order to generate those lower costs to serve. But if they can get it anywhere near $1, that would be a huge advantage. Think of how much it costs for a company right now to pay a driver to deliver your food to your home. It's certainly nowhere near $1. It's certainly nowhere near $1. And I don't expect it to get anywhere close to $1 at any point in the future. If anything, the cost to deliver will only increase as wages increase through inflation. So it's going in the opposite direction as it currently stands with human delivery, but with drone delivery, with robotic delivery, that could go in the reverse direction where your costs every year are decreasing. Not only because of scale, meaning the more people that use your product, you spread your cost among more use cases and therefore you lower your cost to deliver per order. But also, as you grow or every year, there is iteration in the technology, improvement in the technology, which reduces costs as you go into the future, right? So that moves the restaurant industry in particular, the food delivery industry in particular. It reverses these trends that they've been struggling with for the last 5, 10, 20 years, where labor expense is increasing and delivery has become restrictive because the cost to deliver is so high. And so if they can reverse that and separate themselves a little bit from the rising cost of labor, that will be a huge benefit to restaurants worldwide, and they will be willing to adopt this technology. Now, SERV Robotics boasts investments by Uber, Nvidia, Delivery Hero, and 7-Eleven, and these are significant partners, especially Uber because Uber operates that Uber Eats business, and having an investment and shareholder in Uber is a significant strategic advantage for SERV Robotics. So for now, SERV Robotics is only operating in Los Angeles, but they have plans to expand into newer markets, and you can see their growth is robust here. 25% month-over-month growth and 24 months of rapid increase in deliveries since early 2022. And you can see the scale here demonstrated by over 50,000 deliveries in Los Angeles, and there's only 100 robots for deliveries and research and development. So this is at a very small scale right now. So you can see the stock price exploding following news of the Nvidia investment. See the stock price jumping from a little under $3 a share all the way up to $19 per share as of this recording. Now, the company's price to sales ratio also has exploded. It's trading at a forward price to sales of 44.98, which is a very expensive valuation. Now, revenue has also increased from a little less than 300,000 in the trailing 12 months ending January 2024, all the way up to 1.1 million in the trailing 12 months ending April 2024. Still, the company's cash flow from operations are significantly negative, 16.34 million, and moving in the wrong direction, and it will be some time before the company gets this in balance. Now you can see losing 16 million in cash flow from operations in a trailing 12-month period on revenue of just 1.1 million is not sustainable longer term. And so you're going to need investments and you're going to need capital from outside investors for a while before you can turn this business into a self-sustaining business. So with these kinds of economics, the growth will be limited because growth will be constrained from capital. You're going to always need capital to sustain growth for the business. If they can continue to get capital, like this investment from Nvidia and other strategic investors, that will help their growth. And the more they move forward, the more viable the business becomes, because at scale, they lower the cost to serve. And so this is an intriguing prospect. Still, given that the company is trading at a forward price to sales of 45 and the stock price has already exploded on the back of this investment, I would say for me, this is too early stage of a company for me to consider an investment. There's good data to start with, but there needs to be a lot more. I need to see a lot more progress. I need to see a lot more data, and I need to certainly see more than one city, one market to determine whether or not I would be willing to invest. So for now, I would say it's too early for me. I would rate the stock, if I was considering buy, hold, or sell, I would say it's a hold at this point. It should only be considered for those investors that are looking for high risk, high reward potential. And this certainly has a high reward potential should the company continue making progress and hit their targets, especially that target of lowering the cost to deliver of $1. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.